Welcome everyone to episode 2 of the Money Minded podcast. Hopefully you've already checked out episode 1. So the goal of the Money Minded podcast is to introduce anything finance to whoever is interested in knowing more. We also want to go through the minds of traders, investors, or basically people who are money minded. And we also want to shine some light on what to expect in the world of finance. So today I'm joined again by a very special guest, Zen.
Hi, it's me again.
Today we want to talk more about investing. Episode 1 was more about what trading was. And in this episode we want to go deeper into what investing is, which is basically an entirely whole new ball game when it comes to growing your wealth. So just to lightly start off, maybe you want to talk about what investing is and how it differs from trading.
So for me, investment is more of a put the money aside and forget about it kind of thing. And trading is kind of more active, more dealing with it every single day. I'm more into trading, but I know that you do almost half trading and investment, or maybe even more into investments, right?
I would say it's like a 60-40 for me when it comes to trading and investing. Where 60 is in trading and the other 40 is in investing. But I have read on some huge financial people where they said diversification is bad. But in my opinion, I look at it in a point where if you want to get rich in life, and I mean seriously, if you want to be very wealthy, you should put your time more in trading. That's where the big bucks is at. But if you want to preserve your wealth, if you want to make sure that your wealth is sort of beating the inflation rates, beating what your bank can sort of provide to you in terms of interest rates, you should go more into investing and chuck your money in. Like you said, you just chuck your money in and you don't even look at it. That's the beauty of investing, assuming that you invest smartly. There are tons of courses out there that you can either pay for, or you can either go online and search where you can find different ways of investing your money. So Zen, do you do any forms of investments?
Currently no. I'm actually all in on trading. I
100%.
have completely zero in investment. Yeah, I know that some people might think that's crazy, but that's the reality that I have chosen. Because mathematically speaking, I can get a lot more returns on my money through trading, even though I don't use my whole capital all the time. But when my capital is sitting in my trading account, it does receive a little interest. I think very little, about 2% or less. But when it comes in handy, it can generate way more than I could ever invest. And that's probably why I currently still keep all my money in trading. I think in the future, when I hit sort of a ceiling on how much I can trade, I'll probably start to wire out some money and put it into different types of investments.
So that's the thing, right? When it comes to returns, hands down, trading nets you, assuming you're good at trading, it nets you way more returns compared to your investing, right? Percentage-wise, Don't you agree?
Yep. So I would say a realistic goal for investing would be about maybe 10% per year. I guess that is pretty good already. Yeah. Some people can even get about 15 to 20% per year if
that's
do
really good
active
already.
Investing, right? But for trading, if you are trading with a proper strategy, with proper risk management, 20% per month is actually not that hard to achieve.
Yeah.
But again, disclaimer that not many people can do trading well, and it takes a lot of time to even get to a stage where you can generate any sort of profits at all. But once you achieve this stage of trading efficiently and carefully and smart, right, not going for stupid plays, not going for greedy plays, it's very, very possible to generate 10 to 20% per month on your money.
So just, if you don't mind sharing your statistics, you've been trading for about 9 months now. If you have the numbers, do you mind sharing what's your return on average per month?
Right, sure. So currently, I trade about half my max capital, right? And maybe once every 3 months, I'll get one trade that uses my whole capital. And those trades usually return about 20% in one single trade. It's not often that it happens, like I said, once every 3 months. But the average return on my investment size, usually per month, I would say fluctuates between 20 to 30%. So that is why I kind of keep most of my money in my trading account, because I have yet to hit a ceiling.
Right.
Even though I don't use my whole account every single day, but there are trades where I can really size into, and those trades that have high win rate and extremely high returns.
for me, like the definition of successful investing for me personally is when I'm beating the market rates. So I know that CIMB, if I'm not mistaken, they gave one of the best, or at least for my savings account, basic savings account, it's about 4% per annum.
What?
Yeah, it's super small. That's not something to
What?
be proud of, by the way.
No, that's insane. My savings account gives me like 2.5% per annum or even lesser. Dude, 4% interest is higher than FDs, bro. FDs nowadays, when I was working in a bank, FDs for 6 months were like 3.5% per annum or even lesser. I'm surprised a savings account gets you 4%.
Yeah, so I'm looking at a website right now. The UpSave savings account offers a 4% interest rate per annum.
What?
Yeah, but after you take into account inflation, I guess, I mean, Malaysia's inflation is kind of whack. It can go from 0.5% to about 2%, so it depends. But yeah, after you take into account inflation, your real interest rate, assuming Malaysia has a good year, it will probably be about 3.5%. And as long as my long-term investments can beat that 3.5%, I think I'm winning. That's the mindset that I have. Good. But yeah, so one of my major investments that I started off, like one of the first major investments that I've had was Stashaway. And that is really one of the most convenient investment opportunities that I've come across.
They make it so easy.
Yeah, it make it so easy for you to make an account. It's so user friendly. You can sort of see your returns coming in on a daily basis, and the returns are pretty good. You know, I haven't had a Stashaway account for long, but I'm definitely already above the 4% mark. I tell you that. But yeah, wow. You can't really say anything without an entire 12 months.
I think we have to put another disclaimer there that you are currently using the highest risk portfolio, right? With the 36% risk, something like that.
Yeah, another beautiful thing about Stashaway is that they let you be as risky as you want. I believe it actually depends on how much you earn. So they can actually limit your risk management. But
but all of this, they personalize it. Each and everyone has their own sort of set of questions, right?
Yeah.
And it's all like set up quite well.
They also, I think they released a performance review on like people who chose different risk indexes. They have different portfolios. And the ones that put the highest risk index, the ones who are the most risky, they are the ones who are receiving the highest return.
I think we'll look for this article and link in the description.
Yeah, definitely.
Just to be safe.
Just to be safe. But if it turns out to be true, I think their returns were about 20%. And that's
better than putting in your bank account.
It's better than putting in your bank account. And the best thing is, they don't charge you for taking out money every time you want to take out.
Right, because I know a lot of funds, they charge you a lot of different fees. They sort of sell you the fund in some way, but they don't disclose all of the fees until it's time to pay. And then your 30,000 investment suddenly costs 36,000 and you're like, wait, what?
For someone who's new to investing like me, it's just so painful. The only drawback that I see from putting your money in Stashaway or basically investing is that it's not liquid, right? Let's say I want my money tomorrow. I have to wait 3 days.
Right, so we mentioned quite a few investments so far, and these are, I think, the most common forms of investment here in Malaysia. These kind of investments, they are making it easier and easier for people to invest. But with lower barrier of entry, right, it comes with the problem of too many choices. So how do you determine which investment direction fits your style? So
for me, I think one of the first things I look at is their performance. So for Stashaway, it came with a good rep, right? I looked at what were their returns like for the past few years, and then as long as I see that the returns, like I said, as long as I'm winning against the market, I find that it's one of the highest priorities that I have when it comes to choosing an investment.
Right, because everyone likes that ROI, right?
Everyone loves the ROI. Yeah, exactly. I personally don't really like the idea of idle money. You know, when you've got money put away in your bank account, and you're relying on the bank's saving interest, you can just do so much more with that money. Like, you're not going to need that money, right? I mean, obviously, you're going to have like a allocated amount of funds for you just in case emergency happens, right? So yeah, you can set that limit down to you. But anything other than the amount that you allocate, it's sort of idle, right?
Yep. So I actually heard a very interesting analogy today about investing money. So by making money and living in a bank account, right? It's like if you play Monopoly, you're going round and round collecting your 2,000 after you pass go, but you're not investing into any property, right? You're just holding on to that cash. You'll never win the game if you never invest your money.
Exactly.
You're just going to be going in circles, collecting your money when you pass go. Every month, your salary, you're collecting. If you're not earning enough, I don't think investing is something you should look for first, right? Focus on increasing your income before thinking about investing.
Yeah, exactly. And another thing that you should also consider when investing is that you're not going to touch this money in like a very, very long time, by the way. The whole concept about investing is you lock up your money, or at least when you need the money to buy like something big, not to buy food, not to buy branded items. It's for you when let's say you want to buy a house, right? That's when you need to use the money.
I think everybody has that understanding of like, yes, investing is long term, but a lot of people don't actually put it into practice. You see a lot of people buying into funds, buying into long-term investments, only to come to you 2 months later and say, should I sell it now and buy when it's lower?
Especially
you're not
in
trading.
The stock market. In the stock market, definitely that happens.
Yeah, but you have to remember, you're not trading. When you're investing, you're not buying low and selling high. You're buying ownership in a company. You want to own the company. I think that's the idea that most people are missing out on. Investing is wanting to own a company for a long time because you believe that this company creates value and can continue growing in the future. But most people nowadays are too caught up with price of stock instead of, do I actually want to own this company? That's why a lot of people are trying to time the market, and that's just leading to a lot of disappointment.
Yeah, you mentioned that, and yeah, I definitely agree. Like let's say when you plan initially to start investing in a stock, for example, and this stock price shoots up, and then you're gonna question yourself, hey, should I sell it now? And then how you're gonna justify that is probably like, for me at least, is when I'm gonna sell it now when it's high, and then when it comes down a bit, I'm gonna buy the dip. But that's just not investing now, is it? It's kind of becoming a trade already. Technically went into becoming a swing trade.
Yeah, your so-called long-term investment just became a 3-month trade. Right?
Yeah.
But you're doing this without a plan, and 99% of the time you're bound to fail. You're never gonna catch the top, you're never gonna catch the bottom.
Yeah, exactly.
Even if you do it once, you'll never do it twice.
We mentioned this in episode 1 when we talk about trading. If you don't go in with a plan, you are planning to fail, right?
Yeah.
So another thing that we mentioned Monopoly just now, right? And we talk about buying properties. I mean, both of us, we don't own properties, but maybe we can give our opinions on like what investing in properties mean at a young age. Like, do you think it's a good investment, buying a property? Like the whole concept of buying a property and then collecting rent, and then you can pay off your mortgage, like, what do you think of that idea?
I've actually had quite a lot of thought about this topic because I feel like I am at a stage where I am almost hitting a ceiling in my trades, and I'm looking for somewhere to sort of invest my money. And obviously, real estate is always a hot topic, right? But a few problems with real estate is that initial investment is very large, and this is proper illiquid. You said that you can only withdraw your money in 3 days. If you go into real estate, you can't withdraw your money.
Yeah, yeah, that's
your
true.
money is locked in for the next like 10 years until you
more
sell
than that. Unless you're telling me you earn like 5-digit income, yeah, your money will be locked in for so long.
That is one of the biggest issues with real estate. And the other thing is, a lot of this real estate hype is sort of brewed in the US, where you see people getting rich off of real estate, right? Buying, renting, and then their rent covers their mortgage, and they're making some.
There are so many like social media YouTubers who tell you that.
Yeah, who preach.
Preach. Go into property and everything.
They do it well in property. But the reality in Malaysia is that the rental income here is very, very low.
Yeah.
So
I think my brother who stays in Taman Tun, one of those Taman Tun housing areas, I think it's a 3-toilet, 3-bedroom. I don't know how many square feet, but he's paying about 2,000 ringgit a month. 2,000
ringgit a month? Like, the cost of a 3,000 square feet place is probably about 2.5 to 3 million, right? And 2,000 ringgit a month. So 2,000 ringgit per month, 12 months, 24,000 ringgit per month for rental, right? Let's say all your cost considered, right? Cost of housing, cost of maintenance, cost of bills. You're paying 3 million for that house. That's less than 1% return per year.
Yeah, you gotta cut off
on a 2.5 million.
Cut off
house.
inflation, my bro. You got inflation to worry about as well.
From my research, the average rental in Malaysia is about 3%. Right, 3% per annum. So for let's say for a 1 million ringgit house per year, most likely you will charge about 30,000 at max, right? Assuming you have an average property lah, right? Assuming you're not interior design aficionado with like crazy interiors. So
Yeah.
the logic of your rent covering your mortgage, right? You gotta get a mortgage that is less than 3% in order for you to break even on a monthly, like out of pocket break even.
But assuming that you can sort of pay your mortgage with the rental that you receive every month, because that's like the ideal scenario, right? You kind of want to have an equal or at least more of an inflow of money. It's that inflow of money is more than your outflow of money when it comes to like property. That's like the ideal scenario in hindsight, right?
Yes, I agree that property could provide more cash flow, and that is always ideal. But in terms of percentage gain per year, right, I think property in Malaysia is probably one of the most inefficient, although easy to get in, is one of the more inefficient methods of investments in terms of percent. Okay, I'm talking about in terms of percent per year. Like if you were to invest into an S&P, let's say historically 10% per year lah, that's triple the amount that you will get in a real estate investment.
But I mean, it's also very important to remind the listeners that we are not like any experts or anything like that. This is just our own personal opinion.
Yeah, our facts might be wrong.
Our facts might definitely be wrong.
Fact check us. Let us know in the comments.
Yeah, I mean,
our facts are most definitely probably wrong.
One of the reasons why I wanted to do this podcast is as well to like build a community where we can all share our ideas on what financial success is to everyone. Like, yeah, I kind of want to make everyone rich, which is kind of hard, but you know, that's just like a small little side milestone that I want to have. Another form of investment, I wouldn't say investment, but like what, for me at least, like before I got so serious into investing and sort of preserving my wealth, was that when I graduated out of college, my first like major milestone in my life and that I eventually want to hit is to buy my own car, right? And that is actually, that once I did the research on it, it's one of the worst forms of like investment. Like buying a car is like so expensive. It shouldn't be
it's
one
the
of my
worst
goals.
thing you can do.
I mean, obviously, this all depends on like your own personal scenario. But for me,
No, if you want to buy a car, buy a second-hand car. Okay,
Buy a
don't
second-hand
buy a new
car.
car, please.
like the moment you buy a car, it depreciates in value by about 30%, at least. And
Yep.
Why? And it's not like I'm okay. So
Can
you
I
have.
ask you,
Mhm.
why do you want to buy a car?
I mean, okay. Before I knew any better, it's just, I don't know. It just seemed cool, like I get to show off to my friends, like, hey, I own my first car. I bought it with my own money and things like that. I mean, there's that self-satisfying feeling that you're a self-made man, right? That was like before I knew better, but now that I really think about it, I don't really need to buy a car, right? You and I, we had this conversation before plenty of times. Like the substitute for a car is public transport, and for me, it's so convenient and it's
Exactly.
so cheap.
You have the MRT
LRT.
or the LRT.
LRT.
You have Grab, you have bus, you can walk. Like our public transport here in KL is actually really, really good.
But eventually you want to buy your own car, like no matter what, right? Don't you? No?
Not really.
Under your own name, like isn't
Not
that like a
really.
goal of yours?
No, not really.
I eventually want to under my own name, like when I have the money, of course. But it wouldn't be my first goal. It wouldn't be my first asset to put into.
Obviously, I have like a dream car and a car that one
Really?
day I wish I would own.
What's your dream car, dude? Side topic. What's your dream car?
You really want to know?
For the listeners, what's your dream car? A successful
I
trader.
really, really, really like the Lamborghini Urus.
Lamborghini Urus.
The SUV, the Lamborghini SUV.
Nice.
But let's be real, I'm never gonna buy that because it's such a waste of money.
You never know. Like one day, let's say your trading kicks off, and maybe by then you're like a CEO of a company, and you have the money to splash. Why not? Right?
Yeah, sure. If maybe 30 years down the line, when I just have cash lying around, right? One day I'm sleeping on cash. Maybe I'll spend the money like that then.
Everyone
But
has
until
dreams.
then,
Yeah. Everyone has
until
dreams.
then, I don't have any goals to buy anything, right? Even for property right now, I'm just not too keen. After going a little bit into detail, looking for any ways that I can increase my cash flow, even properties might not be the best way to go.
Yeah, I think property is kind of like for me, it's like a losing bet. Like, I mean, not to say it's a losing bet, but there are better opportunities out there when you're talking about ROI.
In terms of property, I'm not saying that property doesn't work. I'm just saying it just doesn't fit what I'm looking for, right? It doesn't fit the percentages that I want. It doesn't fit the goals that I have, right? But I might go into property from a different angle.
What do you mean?
More of a wholesale angle. And I guess we can talk
Wholesale.
about this in the future.
We may be excluding the fact that the property value might skyrocket. Who knows, right? Maybe Raung might be the new Clang or something like that. That's what people say.
Sure, but you know me, I prefer to have a more consistent and sustainable way of investing. I wouldn't consider the appreciation as part of my yearly ROI.
Yeah, so that's our take on what investing in properties are. Maybe you guys have your opinions on it. Let us know in the comments or wherever you're listening. So another huge investment people are looking at right now. I don't know about you, but cryptocurrencies are booming right now. I mean, when I say right now, it boomed like a few months back, but it's still kind of booming. And that boom a few months back was the thing that brought me into looking at cryptocurrencies. So are you investing in cryptocurrencies then? Like, let me know.
No, I currently, like I said, 100% into trading right now. But crypto is an interesting take for investments. But to me, crypto is more of I would call it an Armageddon investment. You know, I would never put more than maybe 5 to 10% of my investment in it.
So the golden rule is basically don't put more money than you're willing to lose, right? When it comes to trading.
Yep. And for crypto, sure, you can look at statistics and say in the past 10 years it's the best performing asset or whatnot. But let's be real, it's only been booming in the past like 12 months. And if I was investing, that would not be enough confirmation for me. And I have mastered the art of not FOMOing, of staying away from, I am numb to FOMO, so it's okay if crypto leaves me behind. I'm completely fine by that. But like I said, it will be more of an Armageddon investment, or another way to think of it, it will be an insurance. I might invest maybe 2 to 5% of my portfolio into crypto in the future. And let's say the world really goes down, right? Fiat currency is worthless now. My 5% of cryptocurrency will probably turn into 95% of my portfolio when it starts to grow. Hopefully that makes sense.
So one of the reasons why I got into crypto is basically I read somewhere that there's a good chance that it may become the currency of the future, right? People will probably, when you go into crypto long term, for me, I was betting on the fact that it will become the medium of exchange in the future. So what do you think of that statement? It has a pretty good chance, don't you think?
Well, I can't say whether it has a good chance or not because I have not educated myself much on this topic. The most that I've educated myself is basically the logic of blockchain, the science behind it, and that's the extent of what I know about crypto. But in terms of worldwide usage, I feel like that is still speculation. And rightfully so. It's shown in the risk reward, right? It's extremely high risk, but
very
it's extremely
volatile.
high reward.
Yeah, one of the things about cryptocurrency is that its value is based on outward perception, whereas your currency's value is based on what the government perceives it to be, right? If the government wants to repay a debt, what they would do is normally print more money. And normally when they want to pay a debt, it goes out in terms of like bonds, and then those bonds will generate dividends. So let's say you're the person who is getting the dividends, and the government decides to pay you back by printing more money. Basically, that dividends value goes down. right?
Yeah, pretty much.
Yeah, and that's why I would say a lot of, from what I read, like governments are against these sort of like cryptocurrencies, because if you're not investing in those bonds that they issue, they can't do their projects.
Yeah, then they just lose control of their of money lah.
Yeah, exactly.
But at the same time, right, Bitcoin is still pegged to the US dollar. At the end of the day, you wanna use your Bitcoin, turn it into US dollar. So until we get a proper method to use Bitcoin, I am still just gonna sit on the sidelines, like I said, use it as more of insurance instead of a big investment.
Yeah.
Because although I trade and people perceive traders as super high risk, I actually don't take much risk. Believe it or not, my risk is actually extremely tight. I'm very, very risk averse. And Bitcoin is just stepping outside of my comfort zone really.
Right. Moving on to like different sorts of investments that are not the status quo. Do you have any friends or maybe you might have this sort of investments that you have that aren't necessarily quote unquote normal? So, for example, my brother, he has a bunch of magic cards that go up in value. You can classify that as an investment, don't you think?
Yeah, definitely. I'm sure all of you have seen or heard the Pokemon hype recently and how a Pokemon card or even a Pokemon box has gone up from like a mere $50,000 to being sold to Logan Paul for like $500,000. So
what? Wait, what?
Say what you want, but those people who invested in Pokemon is basically really hit the cash cow, right? And I'm sure there's just endless things to invest in right now. I myself, I don't hold any significant investments right now, right? But I've seen people holding few thousands worth of cards, few thousands worth of shoes.
Shoes, right? Shoes are one of the other things that people are crazy about ever since way back when.
In that hypebeast culture, that kind of stuff.
Yeah, and yeah, you can actually make a living off. I think we have a friend, right, that does that.
Yeah, I have a friend who literally, he basically trades, but instead of stocks, he does shoes. And it's pretty crazy how large these things can go, right? How a niche can blow up once you hit the right audience.
And probably like from outwards perspective, you wouldn't sort of encourage someone to do that, right? But when they make it, they really do make it.
Well, I wouldn't say, wouldn't recommend people to go into this.
But it's like a weird sort of business to have. Yeah, it's not that everyone is doing it.
Yeah, definitely not, because it's just out of the norm, you know? And I think that is where a lot of money lies, and just mainly in niches, you know? A lot of niches that many people are just not used to, I guess just because it's uncommon, right? I don't think people look down upon going into these niches. I think it's just a less explored field just because of the passion needed, the passion and sort of the amount of time you need to even learn the niche. That's why it's a niche, right?
Yeah. So, dividend investing. I'm not so well versed in dividend investing, but I find the concept kind of cool, don't you think? Dividends. First of all, in Malaysia, you don't even get tax.
Investing.
You don't even get tax for dividends that you receive in Malaysia.
You do get tax, dude.
I mean, yeah, you get tax like in... Do you? Wait, I thought you don't.
You get tax before you receive the dividend.
You get tax before you receive the dividend, but like you don't have to like claim it again, I guess.
Yeah.
It's all paid up at a corporate level already.
Yeah, but you get taxed before you even receive the dividend. I think dividends, it's one of those things where there's no dividend that is just too good to be true. When you're going to dividend, the good thing is that you know what you're getting. It's easy to calculate, right? It's just two factors to take into account: dividend and stock price. That's it. And as long as you're investing in a firm that is doing actual sales with actual cash flow, then it's an easy investment. And the fact that it is an easy investment makes it less attractive, because the more people invest in it, obviously the lower your yield is going to be. That's just how supply and demand works. And because the demand is usually always efficient, meaning most of the time a proper solid firm, if the dividend yield is higher than average, you can bet that most investors or most big funds are going to be buying into it until the price reaches an equilibrium of about 3 to 4%, maybe even 5% per year. And that's just how it is, right? Big money always goes for dividend investing because it's consistent. And that causes it to be stable, but stable means you can't expect big returns.
Yeah. I mean, the point is basically for me, when I look at dividend investing, I need to have a lot of capital for the dividends to be worth it, or else I might just put that money into trading or put that money into stash away or something, because you still have to wait quite a bit for every quarter for dividends to come at best.
Some every quarter, some half year, some annually. So it really depends on what you invest in.
Yeah, but the fact remains true. If you want your dividends to be worth it, you have to put in a lot of money into
at the
dividend
end of
stock.
the day, it's still a percentage game, right? And if you have a small account, if you have small capital, you have to accept that at the end of the day, 3% of a 1,000 ringgit account is still 30 ringgit per year. Right, so you have to manage your expectations when you're going into safer investments. You can't go into dividend investing hoping to double your money every year. It all depends on your goals and your risk appetite. So some people really like dividend investing because it's simple, safe, consistent. Some people who, I assume the younger generation who are used to seeing huge 100% gains online, dividend investing is just never going to give you that amount of returns.
Yeah, in terms of percentage, it won't. But a lot of people, when they make it big, for me, if I do actually make it big and I earn a lot of money, dividend investing it wouldn't be off my list, to be honest. I mean, people will say it's easy money, but I don't believe in easy money. But
it's easy money after you've gone through the hard work to get the huge capital you need.
Exactly. Yeah. Like to get the capital that you need for dividend investing, that's the hard part. But once you get the capital, then that's probably where people would consider it easy passive income. You're right.
Yeah, but I do believe in dividend investing as well. Like the 4% rule where you're trying to get the 7-8% ideally per year. Yeah. And then you can reinvest and spend, and you don't have to make any money for the rest of your life. And I think that could be attractive to some people. And the fact that it exists an option for you, right? I think it's quite an interesting topic.
So we mentioned about it earlier in the podcast, but we mentioned a bit about FDs, fixed deposits. So you and I, we both have our opinions on FDs and why we don't like it so much. Maybe you'd like to start off like why do you think FDs aren't that attractive to you?
Go into Stash Away. Stash Away, you're clicking a few buttons, right? And you can pull your money out anytime you're making. Assuming you're going for a high risk portfolio, you can most likely make more than your FDs.
But FDs, they are to play devil's advocate, right? FDs are like guaranteed, right? Okay, correct me if I'm. Aren't they guaranteed to give you a fixed return? Yeah, until the bank 爆炸lah. Yeah, but
bankrupts lah.
Unlikely.
So what people fail to see is that sure, FD is 99.9% safety, but in the 0.1% of the time you lose everything. All for a return of 3% per year. At the end of the day, I believe that the market is majority of the market is efficient, and all the risk and reward has been calculated already. So there's no one greatest investment. At the end of the day, it's really all risk reward. It's all risk reward, and it all depends on your own risk appetite. It really does depend on your risk appetite. So if you are lazy and very, very risk averse, or you have a lot of commitments that you need a minimum return on your money for, FD is fine. FD is safe. But safe will never get you anywhere.
I totally agree. There are definitely options out there that are better than FDs.
Yeah, let's not talk about FDs. Nobody is interested in FDs. And if you're listening to this, you're most likely not interested.
You never know. Maybe they have some information out there. Maybe they know something that we don't about FDs. Like, one of the reasons why I don't like FDs is because your money is locked up, man. Like, you get penalized if you decide to take out the money that you put in.
Yep. So we've talked about different methods of investing. Now, we should also go a little bit into the practicality of investing, because we did mention that if you're not making a decent enough income, there's really no point in investing yet. So if you're making barely enough to survive, I would suggest you focus more on investing in yourself. Really invest in yourself, because learning a new skill and having a skill that could potentially bump up your income. I mean, there's no other investment that gives you the same percent returns as investing yourself, because your 2,500 salary could be bumped up to 4,500 just by learning, let's say, advertising, social media marketing, right? Anything. Graphic design. I know a lot of people are hiring graphic designers right now, so that's a pretty hot market in the future. Everybody's going to e-commerce. Somebody has to design the logos.
Learning Python, learning any form of programming language.
Yeah, coding. There's so many free resources if you don't want to pay for classes. There's a lot of free resources online. You just have to invest some time or even money, right, to get the proper tools to learn, and that is better than any form of investment.
That actually ties into one of the videos that you posted on your YouTube channel. Basically, invest time in yourself.
Yep. So recently I talked about my investments. And one thing that people don't see, right? Everybody is busy thinking about how do I invest my money. But I think of time as a currency as well. And I think that the time that you have can be invested as well. And you should be thinking about that as much as you're thinking about investing money. Because time and money, if you invest both of it at the same time into something good like yourself, could really benefit multiple times of the investment itself. For example, my trading, I invested technically about 5,000 into my trading to test the market, and the
5,000,
returns is exponential.
Did you say invest 5,000 hours or 5,000 like?
No, I invested 5,000 ringgit and about 500 hours into learning how to trade, right? And look at the results, are just exponential. No investment that I would have put money into could have given me the same return.
But yeah, I mean, investing in trading is not easy. Investing in investing isn't easy either. You have to do a bit of homework, let's be real. You have to go and make sure that what portfolio that you're investing in, are they growing? Do you actually, in your opinion, see some sort of opportunity for growth of wealth in that specific portfolio? I wouldn't advise someone to go into an investment if they don't know what they're investing in. For example, I did a bit of homework when I was contemplating whether or not to invest in Bitcoin, to invest in Stashaway, to invest in eToro, where, there are US stock markets and everything. Each one of them, I had to sort of do a bit of groundwork, things like that. All those sort of things come into play, and you sort of have to know what you're going into before you're investing. There's no such thing as you should put your money in and then you don't know what's happening to the money. You don't know how it's being invested.
Yeah, the due diligence is always a necessity when it comes to investment. There's no easy way out.
I mean, there is a chance that you might luck out, right? I mean, but I wouldn't bet on it. Yeah, it's not something that...
Yeah, there might be a chance that you luck out, but
no.
Are you going to bet your future on it?
I'm not going to put my life savings into something that I don't know anything about. Yeah, it's not smart.
Exactly.
Yeah, but you mentioned due diligence, and that is 100% true. No matter what investments that I want to do, I have to do a bit of homework. I have to suffer a bit, because there's no such thing as easy money. Not that I've learned of.
Okay, but for those of you who have excess income, right? I think the best way forward is to have a set percent of your income put aside every month at least for investments, right? That would be the most surefire way for you to at least get some sort of investment rolling. Because I think a lot of people like to spend way too much money, right? And they're just living above their means. They just want to buy just so that they can seem like they are successful. But there's just really no point in that, because really nobody cares.
To be fair, I mean, I personally have experienced times when I want to buy something branded, and the moment I buy it and I get it, let's be realistic, I value it for about 1 week. And then the following few weeks, I can see myself not caring as much about that specific item anymore. And that's one of the things that made me not be so materialistic, or at least not be so lenient on what I spend on. Because when it comes to like clothes and shoes and accessories, I was in that phase where I really liked those sort of things, but I just can't, especially when I started working for my own money, I just can't fathom putting money back into that again, because money has so much more value to me now that I'm employed and I have to self-sustain myself. And I believe everyone is working to a point where they want to become financially independent, right? Zen, you don't want to be relying on your parents for the rest of your life, right?
I think one of the best examples I have for buying these kind of branded goods and whatnot, right? It's like your iPhone. Remember, if you're using an iPhone or like a Samsung or whatever, your smartphone, remember when you first got it, how great it was, right? Having such a strong phone, right? And look at it now. It's like an everyday normal thing. So
Yeah,
if you focus too much on like spending on all those kind of branded stuff, right, it would eventually normalize, and then the value is just such a short-term value. But imagine working like 50 hours, let's say you're working 50 hours just to afford some branded clothing. That's just for your own sake. Your time is worth more than that, man.
Yeah, like actually, a little saving goes a long way, right? Let's say you save $300 this month, you save $500 next month, you save a bit more next month, then all of a sudden you got 1K sitting around. You can sort of start thinking about how you can make this wealth flourish even more. Like a little saving goes a long way, in my opinion.
Yeah, and I think this is Warren Buffett's favorite topic, right? Compound interest. You invest a little bit every single month over the span of like 30 years. And let's do a quick calculation. If you were to invest 1,000 today, right? And every month you put in an extra 200 ringgit. Okay, every month you put in extra 200 ringgit. All you have to save is 200 ringgit a month. Assuming you invest in a portfolio that returns 8%, in 30 years, your portfolio will grow to about 300,000 ringgit. Just by saving 200 every month.
You can buy a small house. You can buy a car.
Yeah, you can buy a car. Or you can take that money and invest it again. And return even more and more and more and more.
Yeah.
Alright, and then just let me show you the difference between 200 and 500 a month, okay? 200 a month in 30 years, you will have 300,000. 500 a month in 30 years, you will have about 700,000.
Then you have to go back to saying that, investing, you're playing the long game. You have to be disciplined, even in investing, not just trading. You have to resist from withdrawing unless it's like the absolute necessary.
Yeah, so that's one thing that new investors, sort of new players in the market, need to understand, is that you're in for the long game. Most of you probably barely got 1 or 2 years in the market and you're thinking of selling already. Old school investors, they're holding for 30 years, dude.
Serious.
You're not even 1/3 of the way there.
I think it's safe for us to mention this again, that we don't offer financial advice. We are just doing this for our own entertainment purposes. We don't want you guys thinking that we're trying to control you. You do what you want. If buying branded stuff puts a smile on your face and you think it's worth it, go ahead. I mean, yeah, that's your life. Live it. If it's your own money, do what you want.
Yep. At the end of the day, you are responsible for your own money. You're responsible for your own investment. We are not financial advisors. We're just speaking.
We could be wrong. Let's be real. We could be wrong with the facts that we give.
We're just speaking our opinions, just for entertainment purpose.
Give us your opinions on what is a good investment opportunity to you. What have you guys invested in? We like to hear it.
Yep. And again, what we say might most probably won't be the best way or won't even be a correct way to invest. So let us know what you think, because I believe everybody has their own take on investment. It's such a complex topic with so many different ways to go about it.
So yeah, thank you very much for tuning in, guys. This has been episode 2 of Money Minded. So hope you guys enjoyed, hope you guys learned something new, and I'll see you guys in the next episode of Money Minded.